it's all about keeping the money moving. It's great to be a millionaire. Property values always go up. We were looking for diversification from single family, diversification from the stock market.
Mindset is your greatest asset. Greetings, well builders. Welcome to Get Diversified, your go-to podcast for all things real estate investments.
I'm Jacqueline.
Melvin Landry. We're thrilled to embark on this wealth building journey with you.
Imagine this. What if your investments not only secure your future, but also unlock a life of financial freedom? That's what we're diving into on this show. Apartment buildings, storage facilities, mobile home parks, the whole shebang.
But here's the kicker. It's not just about investing. It's about crafting a legacy, building memories with your loved ones, and seizing every moment. Time is the currency of life. And let's be real, none of us wants to waste.
We've got the insights, experience, and dash of excitement to spice up your investing game. Plus, we'll throw in some real-life stories that'll make you see the potential in every brick and mortar.
Subscribe, buckle up, and get ready to turn your investments into the ticket to financial freedom. Together, we're not just building wealth, we're building the community of savvy investors. Let's get diversified. What's up, everyone, and welcome to another episode of the Get Diversified podcast show. Today, we have a fantastic guest. He's a mover and a shaker in multifamily. He's a mover and shaker in real estate. He's a mover and shaker in general. Our guest today, Mr. Michael Guthrie. How you doing, brother?
Fantastic. Thank you so much for helping me today. I appreciate it.
Hey, man, it's a pleasure to have you on the show, man. So as a seasoned vet in the real estate space and moving around and doing things to get diversified, got to talk to you, man. Got to pick your brain. Got to show for the listeners. Give us some intel on some things of what they should be doing. So let's kickstart and kind of tell our listeners who you are, where you reside at now, and what you got brewing going on right now.
So Michael Guthrie, I am living in Scottsdale, Arizona currently. I've been in the multifamily real estate space for about the last 4 years. I owned about 7 single family rentals for probably about 13 years prior to all of that. Mm-hmm. And I've been raising capital in the multifamily space over the last couple of years. And we've been buying a lot of buildings. In the last four years, we've bought a little over 8,800 doors. So we've been trying to keep a little bit busy, staying on top of things. And it's all about keeping the money moving.
Yes, keeping the money moving. Not about the cash, but the cash flow at the end of the day, right? So one of the things we like to talk about is enhanced cash flow, keeping cash flow going. So 8,800 doors. Man, if someone's out there listening, that may scare them. That's a lot of apartment buildings. Let's take a step back. Won't you share for the listeners? How did it start for you? When you decide I need to take step one, etc. So let's just share the journey. Let's talk about that.
That's actually a great question, because you just don't fall into 8,800 doors. There's a process and steps that you have to take. So my wife and I ran a ATM processing company across the United States, a little over 8,500 ATMs, and that took us 28 years to build. So it takes time to build these things up. In the multifamily space, we were looking for diversification from single family, diversification from the stock market, and having the cash flow from the ATM company gave us a leg up on most. So we started in the business just wanting to be a limited partner investor, so that we could eliminate paying federal income tax, because you can imagine running that many ATMs, having really good cash flow. I was almost in the 7-figure place paying taxes. And they always say it's great to be a millionaire. And what I mean by that is there's 4 stages. There's when you make your first million. The second one's when you have $1 million in the bank. Your third is when you have $1 million on your tax bill. And the fourth one is when you save $1 million by not paying that $1 million in taxes. So there's your 4 stages of being a millionaire. So how did it get started? We found a mentor like Melvin that could help you mentor into this space. And we learned from him, and we started buying into these syndications, and they would be 100, 150, 200 doors. And then I found one with 600 doors. So I got into that one. So now we're at 800 doors. I found another one where a guy was buying 3 complexes, 1,500 doors. Now we're up at 2,300 doors. See how it compounds quickly.
Yes.
And these started out as $50,000 one-time investments. So it's not like I'm putting in millions and millions of dollars, or we're 50,000. And we figured out, man, we have a lot of cash from our ATM company to deploy. So we took it from 50, moved it up to 100. Buying the same complexes, we're just, instead of buying 1 share at 50 grand, we're buying 2 shares at 100 grand. And we did that for a number of buildings. And then we moved it up to 300,000. And then we got asked to raise capital on our first deal. And so I figured, if I'm going to be in charge and I'm going to represent this property, I better come in a little heavier. So I came in on that with 500 grand. And so I am different than most people in this space because my company was making a lot of money, as you could tell by the previous couple sentences, on our tax situation. So you had to be making money to pay that kind of tax. So we had a lot of cash flow. So we wanted to diversify the cash flow into assets we didn't have to manage ourselves and that we could make money on while we sleep, the same way we made money in the ATM space, and let the money go to work for us so we didn't have to work that also. We were working the ATM company and then we let the money go out and work for us. So that's how we got going. That's how we built it up to that many doors over such a short period of time.
Okay. So, wow, you built up a lot of doors. Seems to be really quickly versus where you started. When did that light bulb go off for you in terms of on the capital raising aspect, right? When you were asked to raise capital, I mean, did you run it like, I can do this, or what was the mindset, right? Because there's a lot of this success, mindset, right? Being able to be like, I can do it. Let's go ahead. Let's go get it done, etc. Want to share some insights on your mindset?
Absolutely. So if you ever listen to Yogi Berra, he'd say baseball is 80% is 90% mental. So all of it's up here. And when I got asked to raise capital on my first deal, I had no idea how to do it, who's going to give me the money, how I'm going to convince them that this is a great opportunity for them to be in. So all I did is when I got asked, and I got asked by these two ladies, one said she could put in 200 grand, but she said she doesn't have an audience. She can't raise any money. She's trying to figure out how to raise money. The other lady that I was in the deal with said, I think I can raise $1 million. That only left $5.5 million left to raise. That's if you've been on Melvin's podcast, you know that's a steep hill to climb.
Yeah.
So I just got on my phone, started texting everybody. I didn't say no for anybody. Started texting everybody. Said, as you know, I've been investing in apartment buildings for the last year and a half on my own. And now I've been asked to raise capital. And as a friend, I can actually put this opportunity in front of you. So if this is something you would like to get involved in, this is what we're buying. This is the minimum amount of investment. This is what I'm putting in. And if you would like to get involved, just enter your email below and hit send. If you'd like to jump on a phone call and do a one-on-one consultation with me, just write call in the box and I'll call you. If you're a no and you don't want me to bother you anymore about this opportunity, just write no and hit send. And I did that, and I got to the G's, starting with the letter A. I got to the letter G, and by that time I had $6.5 million committed on this very first opportunity. And it was all just by sharing my own story about me investing in apartments, what it was doing for me and my family, and why I thought it was important that they should get involved in it. And that's all it took. It's not like you're out there selling something. It's not like you're out there asking somebody for money. You're out there sharing your personal experience so that they want to come alongside you and enjoy this journey with you.
That's a fantastic story. And you know what? One of the deals you have sponsored on, I've invested in as a passive investor as well after evaluating the numbers. So know, like, and trust, right? That's what it's all about at the end of the day. So that's a fantastic story that you share. And man, you got to the G's. You didn't even get to the W's? What? Jeez. Nice. That's
good
nice.
List.
Fantastic list. Good stuff.
Good friends.
Yeah. So, okay, now, right, you've helped to raise money for this deal. Here with folks, your superpower once the deal closes. Where you're lending a hand. What's your superpower in the grand scheme of the overall team, if you will? You want to share some insights on that?
So absolutely. So when you're on a team, you don't just want to bring money as your only value. Me and my wife, we bring a lot of business expertise, negotiation skills. Running an ATM company for 28 years, we negotiate things every day, all the time. And in the ATM space, running the amount of ATMs we ran, we would negotiate our processing down to the quarter of a cent. And when you're running 2.5 million transactions, you just do the math, 0.0025 times 2.5 million transactions, it adds up to real money. So we negotiated on everything. So it's not It's not like I'm asking you for a discount. I'm just asking you, is there any room on anything we're doing so that I could save money, thereby giving you more business and then growing the whole company. And we do that in everything that we do, even our own household. My wife will go through, we're in December right now. Within the next 2 weeks, my wife will call the cable company. She'll call anybody that's a vendor that's not like electricity, because they're really not going to negotiate with me, or the water company. But any of the other vendors that we do business with, she's going to call and see if we can get a discount. Maybe we need a smaller garbage can. Maybe we're not consuming as much. Maybe we're recycling. Maybe we're not. Who knows? But she calls vendors Verizon for our cell phones. She calls and says, is there a better deal for me this year? There's always the new plan that somebody gets a great opportunity. Why don't we get that as current clients? It's cheaper for you to keep me than it is to go find a new one. So we negotiate on every little thing, and that in our lives, in our business, in our personal life, it's actually allowed us to save a lot more money, which allows us to do investments, which allows us to live off the money our money's making for us.
You think of that lean mindset, that supply chain, that procurement mindset, dealing with vendors, negotiating, call them and ask them for a better price. I do that in my 9 to 5. So, being able to do that, being able to get results as a result of that, absolute value at the end of the day. So, great stuff. Let's talk about any challenges, you've experienced. I know, you're in the ATM space, real estate also as well. Any challenge? Nothing's always 100% rosy, as we know, right?
No. We always think that entrepreneur journey is up and to the right? That's how that journey goes. No, the entrepreneur journey, if you can see this whole poster back there, it is all over the board. You never know which rabbit trail you're going to end up down. It's going to make you money, or it's going to cost you money. So there's always challenges. And what happened to us late 22 into 2023 with, 8 or 9 interest rate jumps in such a small period of time. People underwrote to go up 2 points. They didn't write for the interest rate to go up 3 points, 4 points. Yeah, we have insurance because it's called rate cap insurance. But as the rate cap insurance people got smarter, they went from a small amount charging on these loans for rate cap insurance to charging large amount. I remember one of the last deals I did in 2022, I think we were charged $600,000 for rate cap insurance. It didn't kick in until the rate went up 3 full points. And that was on a 2-year policy. Ouch. That's not even covering you out that long. So there's challenges in everything you do. Then there's insurance that can go up, and most insurance policies renew right at the first of the year. So about 2 weeks into December, they'll tell you what your new rate's going to be. And then all of a sudden you have 2 weeks to shop it to any other carrier to see if you can save money. And literally end of 2022 going into 2023, one of my complexes in Dallas, our policy was going up $35,000.
Yeah.
Did we budget for that large of a jump? Absolutely not. We budgeted for a 10% jump. So on a $40,000 policy, we had budgeted for it to go up $4,000. Not 35, not almost double, right? So we went right back out to like 4 other carriers, and we ended up going up $4,000 on our current policy. This year, we've already gotten our premium sent back to us, and it's actually gone down $10,000 on that same complex.
The other way.
It went the other direction. But you don't know if you're not being proactive and reaching out to your vendors. Even now, with interest rates that have creeped up and people's rate caps coming up, we have people on our teams reaching out to our lenders, sending them messages. Hey, we're interested in talking to you about interest rates and where they're going to go in the next 12, 18, 24 months, so that we're protecting you, the bank, and making sure we can cover our interest payments. And maybe we have to do a rate reduction or a spread reduction in between what the rate is and what you're charging us. And maybe you can help us by doing that, or you purchase the rate cap on our behalf, and so that you still get paid. And the lenders are very happy people are being proactive, and the people that aren't being proactive and waiting till their rate cap expires or wait to at that point to go back to the lender, you have to do this when you have a lot of time. Like we have most of our loans, I'm out 6, 8, 12 months that we're starting to have these conversations already, because we know that issues are coming and we want to get out ahead of them. And it's just like you were saying, you always want to be thinking the next step ahead.
Yeah.
And that's the same thing with investing. In You're not investing for today. If you're investing, you're investing for your future.
Sure.
So you're already thinking future. If you're putting in your 401k, you're putting money away in an IRA, whatever you're doing, you're preparing for your future. So why not think about everything you're doing in the front and ahead? If you think about it in the back and behind you, you're going to live in what's happened, not what's happening. And you want to be in what's happening or what's about to happen.
About to happen. The notion of opportunity costs, rule number one, the next best opportunity. Thinking ahead will get you somewhere. Not thinking ahead, that's going to be death, right? In many cases, right? Because if you fall behind, and the oops moment may not be able to recover, right? So we're kind of we're seeing that from that perspective or a deal. Wow, fantastic intel. Let's talk about, hey, someone's listening to us on the podcast. They don't know where to get started. What advice would you give to Susie or Joe who they're thinking about getting into real estate? It may not have a lot of capital, but they want to get to where you're getting to. They want to get to where I'm at in terms of the growth and the trajectory how we're taking our businesses. What would you tell them?
I'd say reach right out here to Melvin right here. Get on a call with him. He might be raising a fund where he's raising 10,000 from you and 10,000 from 10 other people. And he's going to go take that 100 grand as a fund manager and invest in that property on your behalf. So you don't actually have to have the full stack. You can go into funds and let the fund go into the stack. You know what I mean? So be a part of doing something. Because I'm going to tell you right now, a year from now, you'll wish you've done something.
Yeah.
Excuse me. But so you always want to be moving forward. So reach out to Mr. Landry here. Reach out to myself. Go online. Go to YouTube. There's tons of gurus, but go with the guru you trust. Someone that's going to call you back. Someone when you call them will call you back. Because here's how it happens at the end of the day. You drop your $50,000 in a deal, and then you all of a sudden you don't see anybody or hear from anybody for a year or 2 years, and you're like, what the hell happened to my money? And you want to make sure who you're investing with and through will actually return your phone call, give you updates, and keep you apprised of what's actually going on.
Fantastic response. Yeah. I mean, if someone, you have to know, like, trust the individual. They have to get back and be proactive to you, right? So if they're not, you may want to think about and consider if an opportunity comes around again, maybe going in a different direction, or even talking to another individual who you know, like, and trust, who may be in the space as well. So fantastic. Let's talk about diversification, right? Because you're in real estate, right? I know you had your ATM business, but you're a part of another offering that I invested in also as well, triple net. So you want to share about different diversification vehicles for the listener so they can know, hey, there's more out there than just kind of the regular real estate. What are some other things options to the point?
There's options as far as single family real estate investing go. You could own your own rental, and then you get to be the manager. You get to take care of the toilets. You get to take care of the roof, the garbage, all the good stuff that comes along with property ownership. Because they're not going to treat it as well as you will.
Never.
That's one. Multifamily, which is when you're buying a lot of doors underneath one roof or multiple roofs, where you're buying a 100-unit, 200-unit building. And then just like Mel was saying, there's triple net. Triple net is like office space. It is like where you see the McDonald's, the Starbucks, those kind of opportunities. We own a Starbucks. We bought that for about $2.5 million, literally middle of this year. We raised all the cash. We paid 100% cash.
Wow.
But why? And people would go, why didn't you get leverage? Because we wanted cash flow. So we got together a group of people. We bought both of these triple nets for all cash. One, we no longer have a lender. We don't have a bank. We don't have a bank. We don't have bank rules. We don't have anybody breathing down our neck. Are you going to make your payments? We don't have any rules there. We don't pay any insurance. It's a triple net. All that is required by the lessee. So they pay everything, and they pay us rent. And then on most triple nets are 10 or 20-year leases with an increase every 5 years. So on our triple nets that we have, with their 20-year leases, the one with Starbucks, I can talk out loud about. It's a 20-year lease.
Yep.
It goes up 10% every 5 years. So in year 5, so it's definitely a 5-year hold. So in year 5, when the rent goes up 10%, we're going to evaluate, is it time to exit that property? Is it time to maybe take a loan out? If you take a loan out, can we make the same amount of cash flow and give the cash that was invested by the investors back to the investor? They can go make another investment. When you take a loan back out of a property and you receive that cash back, there's no tax implications on that cash because there's no profit there. It's just your money coming back out as a loan. So, and then there's hard money lending. If you have cash sitting around, you want to loan people money. There's all sorts of ways to diversify your money. And even though, like early on in COVID, before I even knew about this space, I was in the stock market with a ton of money. And my guy says, Michael, you're as diversified and protected as you can be. And we all know what happened March 17th. That market took a dive, down and out. And I was down 35%. 35%. But I was diversified. I could have been down a lot more, he says. Well, you know who still got paid? He did.
Yeah.
Because I still had money in the market, and he got a percentage of everything I had in the market just because I was investing through him. So I just slowly, when it all came back, and it all came back literally about a year and a half later, all came back, I started single-handedly just pulling little pieces out and putting it into apartments.
Getting diversified.
And I am in 29 apartment complexes in 29 separate locations.
Nice.
And if that's not diversification, I don't know what else is. It's diversification inside of one asset class, but it's still diversification. So I say there's many, many ways to be diversified.
Many. Wow. 29 different locations, 29 different avenues of getting cash flow. And these buildings are going to appreciate.
Absolutely.
And, I know you, of all people, you invest in the right markets. This I know for a fact. So, wow. So, folks, get diversified. We can't say it. I don't even know what else to say. You have to get diversified. You have to take action. What's the risk of inaction? I know some individuals in my circle. They're like turtles. I would wish they would take a step and do something, but they're not. What would you tell those individuals, man, if you're still on the fence and still thinking about it? Is now the time, Michael?
When is now a good time? Because the market right now is down because interest rates are up. And everybody I'm speaking to, next year, we're going to see interest rates come down. And if you're in properties and interest rates are coming down, values are going to go up even more. So there's one thing. The one thing I wouldn't do, and let's just say, I'm going to use round numbers just to help everybody out. Let's go back to late 2022 when they said inflation rates were running at about 8-9%. Let's just go with 9% for round numbers, and say it's December. You have $100,000 to invest, and you leave that $100,000 sitting in your savings account through December 1 into January 1, and 9% inflation still working. How much is that $100,000 worth on January 1? At 9% inflation, it's worth $91,000. It doesn't have the $100,000. It does not have that $100,000 buying power. But if you had that $100,000 in a property and it's got 9% inflation, that $100,000 is now worth $109,000. So there's an $18,000 spread. So that's the penalty for not taking action. Yeah, properties are going to ebb and flow. But if you look at history and the real estate market, you'll see surges where properties will go up 15, 20, 25%, and then they'll come down 6%. They're still up 19 from when you started. And then it's going to go up another 10%. Maybe it comes back 5. Now it's only up 24% from where you originally bought it. The one thing I know about real estate, if you hang on long enough, and this is not a sprint, this is a marathon. We have to be patient. We have to just know that there's going to be some ups and downs, but property values always go up.
Absolutely. even when there's like reductions or the economy is recession, still a good time to get into real estate. Real estate is a safe play. Ride the wave, stick with it. You're going to come out ahead. Fantastic. Let's talk about words of advice, right? I mean, you mentor individuals, right? You got a mentor when you got into the space. What are some good nuggets of advice you can tell out to the listeners who's listening to our show? What would you tell them? Any good words of advice for folks out there?
Absolutely. I say when you're getting started, you're probably going to be a cast of one, doing a little bit of everything. But as you grow and get to be larger in this space, I have a book that I really like, and it's called Who, Not How, because you want to bring the who's into your life that are going to do these other things. Like me, I get pitched on a lot of deals because I am the who that can bring capital. They are the who that can underwrite and operate the deal. Then we have another who that helps go out and secure debt or follow up with the insurance companies or follow up with lenders and stuff of that nature. So you want to make sure you're working with others so that it's not just you doing everything. Because all I know I can only do so much, and I grow faster when I grow with others. So always be thinking about what it is you're doing that you can actually give to somebody else, or what value you can bring to another team, so then you can grow faster in whatever it is you're doing.
Partners, right? I mean, Rome wasn't built in a day, and I'm sure one person did not build Rome. So,
and here's a great little tidbit. When I was 12 years old, and I just thought of this. I was mowing lawns in a little town called Priest River, Idaho. It's in northern Idaho, just outside of Spokane, Washington. And I just went around, knocked on doors, and I'd mow lawns for like $10 a lawn. I got to a point where I was doing 6 to 8 lawns a day, and I was busy 7 days a week.
Wow.
And I literally, at that age, I figured out who, not how. And I hired my brother.
Okay.
And I paid him $3 a lawn to do lawns for me while I was doing other lawns. So I was making $7 on every lawn he was doing, and I was making the $10 on the lawns I was doing. So now I figured out how to grow bigger, faster. Scaling. I didn't realize at that age I was actually scaling a small company. I just bring in on somebody to help to offload some of the work. And he was happy making that much money. I was happy making my money, and everybody worked. We all grew together.
Scale quickly if you can. Take the time and just run through it to ensure that you're scaling. Not only scaling it, but scaling it right. You're bringing your brother along. You're happy. He's happy. You're having a good time, and you're growing at the end of the day. Good stuff. Let's talk about, we're heading into a new year. What are some things that you're working on? And also, what we share for the listeners, how can folks get in contact with Mr. Guthrie?
All right. So we'll start with how to get in contact with me. I'm going to give you my cell phone number because that's how I roll. If you want to learn more, I want to help, because I'm 56 years old, and I really didn't learn about this multifamily diversification space, triple net leasing, until I was like 52. So if I can help you start at an earlier age, you're going to be way further ahead than I ever will be, but I'm doing the best I can. So my cell phone number is 509 270-6701. I'll give it one more time, 509-270-6701, to say, hey, I met you here on Get Diversified podcast, and love to learn more about your journey, and let's set up a meeting. Another way to reach out to me is through my website, pacificcapitalllc.com. That's Pacific as in the ocean, capital as in money, LLC.com. So reach out there. There's a little newsletter you can sign up for, get on my mailing list, see what we're doing, see what we're all about. And what are we doing pushing into the new year? Well, this is the time of year you want to start evaluating all your systems. And I know Melvin knows what I'm talking about, because I'm reaching out to a friend of ours that she's going through and evaluating all my social. I think I'm good, but I think there's room for improvement. She's evaluating my newsletter. She's evaluating my website. She's evaluating everything I do, everything I produce. so that I can work better. Because I can produce it and I could think it's amazing for me. But if my audience, my investors don't resonate with the message I'm sending out or the message I'm giving, I'm going to have problems connecting with them. So we want to make sure the message I'm working on and I'm sending is connecting with you, our listeners, so that you're going to take action in your own life to improve it.
Wow. Mic drop there, man. Working on the systems, keeping it going, continuous improvement, right? We're getting back to that procurement supply chain adage. Always looking at ways to expand, get better in business, and same here, right? Always looking to see how we kind of extend the reach, continue to grow, and just continue to kind of keep giving positive and favorable messages.
And one of my favorite things is constant and never-ending improvement. So we always want to be improving ourselves, whether it's just by working out, eating better, being a better husband, serving our wife, serving our family, bringing the right things home, so that we can continue to grow in our lives personally. I mean, have an attitude of gratitude. I mean, every day when you wake up, that's another day you get to live.
Day. Amen to that, bro. We'll mic drop on that one too. Mike, it's been a pleasure. Hopefully, I know the listeners get a ton of value out of this conversation, this experience. You shared the knowledge, and you shared how someone can go from 0 to 1, right? It's about taking that first step. That's half the battle. Mindset is your greatest asset. So, Mike, on behalf of myself, my wife, Jack, and the team at Moreland Equity Capital, it's been a pleasure. Thank you so much, brother.
Absolutely.
Jacqueline and Melvin, thank you so much for taking time out of your busy day to listen to this episode of Get Diversified. Please make sure to subscribe to our podcast so you don't miss out on future episodes. Finally, stop by our website and follow us on social media. Ciao for now. Make it a great day, and we'll see you next time. And remember, get diversified.